Jessica, welcome.
Hello.
Hi. How you doing?
Good. Making our way through this.
Well, that's it. That's it. This too shall pass. So let's hang in there. And we're excited to have you part of this LinkedIn 10-minute question answer with the market expert. And my first question for you is, we all know Vancouver has been a hotspot for Asian investors for decades now. The land is limited. On one side, you have mountains. The other side, you have water. As a result of some of these factors, prices have only gone up one way, and that's up in the past. Do you have some stats or anecdotal evidence to share with respect to Asian capital flowing into Vancouver now, pre-COVID and post-COVID, especially given that COVID has impacted both China and Vancouver equally? How do you think the investors will respond in terms of cash inflows or outflows?
hmm So I think that we will see another wave of capital come from Asia to Vancouver, potentially from either mainland China or other markets, including Hong Kong and Singapore. One benefit to the Vancouver market through this is whether it's been by luck or good policy or societal response, it does appear that British Columbia has been dealt a good hand in terms of a lower than average number of cases and responding quite well to this crisis. So we're hoping that if we can control the spread and get back to some semblance of normal life sooner rather than later, it may make our market a more attractive location to invest in comparison to other global cities like New York, London, and Hong Kong. So what is interesting from that perspective, just for some context, we actually already saw a big decrease in Asian capital coming to Vancouver long prior to COVID, probably in the latter half of 2018. And this was a response to mainland Chinese government restrictions of capital coming over to our market. And then also both Canada and British Columbia's foreign buyer tax policies that really cooled our marketplace. So I would say that, we already saw that drop off of major capital influx coming into our market. And we've already been operating in this new normal in comparison to the 2016 to early 2018 period of really heavy investment from mainland China. What is another interesting point is my business partner, Simon Lim, and I went on a trip to Hong Kong last fall. And in the number of clients and investors that we met with, we heard consistently from investors that they were looking to invest in politically and economically stable English-speaking cities, which are desirable to live in. So London, Sydney, and Vancouver were the three most popular investment choices for that foreign capital to flow to.
And was that in that order, or you just scrambled it up?
You know what? I would actually say that Sydney was probably the most popular, to be honest. And I think that just has the benefit of being in a closer time zone and
Yeah.
closer flight proximity than Vancouver. Vancouver was probably the second, and London the third. There was obviously some that were taking a look at trying to get a good deal through that Brexit stage. I mean, now that seems like a small impact in comparison to what's going on right now.
Right. So that's encouraging. But stepping into end of April, early early May, although the weather doesn't seem like it's end of April here, almost feels like 2 degrees today. Lots of sunshine though. At a more granular level, what kind of deal activity have you seen over the last 5-6 weeks? How do you expect to see pricing react to the current situation?
So overall, our team has still been pretty active in this market, despite operating at a lower capacity and seeing a little bit less of a deal flow than we would typically see. We've still put a couple of deals under contract recently and at pricing that we would deem to be aligned with the pre-COVID market. They're deals that absolutely make sense despite what's going on here, but I know that there were some brokers that thought that we would have seen an absolute halt within our market, and that hasn't been the case. And then, knock on wood, we haven't seen any of the deals that we previously put under contract dropped quite yet, at least previous to the public health crisis. So we do expect to see a couple deals extended outwards. You don't necessarily want a buyer to be making a go, no-go decision at this juncture of the market. So we'll see how a couple of those pan out. From a pricing perspective, I think it's still difficult to say. It's probably too early to tell. The deals that we see closing now were likely all negotiated long before this public health crisis started. Whereas the deals that we see closing, 4 to 6 months from now are likely those that will show the consequence of this situation. In our market within the land asset class, we already did see a major price drop in late 2018. But it was really the deals that closed in the second half of 2019 that showed the real impact of that change in the market. And keep in mind that both vendors and purchasers are going to want to see some proof of what the market is doing prior to making major decisions. Once we see a few deals go firm and start to close, it's a bit of a market indicator for a lot of market participants to jump back in once they have an understanding of what's going on.
So from an asset perspective, retail, we all know, is hurting. E-commerce, on the other hand, distribution warehouse centers, in light of Amazon and other companies with more demand coming through. And I was talking to some of your colleagues out east here in Toronto, Peter Garrigan, and his thought was that e-commerce, large distribution centers, or some of the overflow space that might be needed temporarily will be hot in demand. Office is an unknown. What will be the new normal? Hoteling, or sort of people coming to their offices by the date of birth for a certain number of, or month of birth at least, a certain number of days, and coming in batches rather than like a full-blown intake back into the office space. So what is your perspective? What's your take on that, talking to some of the local market experts, both on the buy side and the sell side? Where do you think this crisis is going to lead the most amount of demand in, and what category is something that the investors are going to shy away from?
Well, as you mentioned, I think that office is going to be a very interesting asset class to see the impacts of this rollout on. It's very difficult to say exactly how the office market recovers, and even how we all start to get back to work through all of this. So I think it's going to be some time before we start to see investors feel fully comfortable with that asset class again. Retail and hotel have clearly been the hardest hit through all of this. So I think we're going to see a long recovery time on that front, especially when you take a look at some of the small businesses and hotel groups that just aren't going to be able to fully survive this crisis, unfortunately. Industrial is, I think, going to do quite well through all of this. And as you mentioned, the desire for distribution space, at least here in our Vancouver market, has absolutely surpassed what anyone would have thought is possible. Our team actually just closed on a big 20-acre parcel of industrial land near Lake City Station. And it's interesting, the pricing that we were able to achieve on that sale was above and beyond what most of the market would have thought was possible for it.
Nice. Congrats on that.
Oh, thank you. But just getting back to your question about asset classes, another one that we've seen, or at least that we've heard will continue to be popular over this next little while, is really in the multifamily asset class. So that's for existing multifamily buildings. I mean, obviously they're not fully risk-proof. There are still landlords that only got about 95% of their rent for April. They expect May to be a little bit worse. But overall, you take a look at how the market is responding to multifamily buildings and comparing them to others, and you're really not seeing this black swan risk affect that as much as it is other asset classes. And then another asset class that we've seen to be quite popular is just rental land, and purpose-built rental development land in particular. You take a look at rental versus condo land here, and I think that you're going to see a number of would-be first-time home buyers that will actually be pushed from buying their first home and being pushed back into that rental pool for some time, whether they're seeing decreased salaries, layoffs, or maybe some of their savings being wiped out by the stock market drop. I think that overall, as long as we continue to see positive migration to BC and population growth, I think that overall rental land will continue to do well. And it's funny, on on our side of things, we've actually seen a number of developers that would typically only be focused on building condos take a second look at building rental instead.
Mm-hmm. Well, I can certainly attest to the fact that talking to a lot of lenders are moving away from condo construction loans and financing. Relatively speaking, project by project, they have a preference and a bias for multifamily because you have more predictability in underwriting. Your rents may be a little bit less, but you may not have the problems that some of the potential condo projects can get into in terms of closing of those units as the buyers go through some major financial distress because of job losses. On that note, there has been a fair amount of rent inflation in different markets across Canada, Toronto, Vancouver, and rents are $3.50, $4, $5, $6 a square foot now. Given what you just said, do you think there will be a lot more supply vis-a-vis, but you also mentioned there's going to be higher amount of demand? You think the rent inflation will continue, or over next 12 to 24 months, the rents will stabilize or maybe even be more economical and reasonable for people who are unable to afford the homes, but also with the job losses or reduction in salaries or bonuses, they are able to afford these apartments?
I think that for the time being, we're going to see rents remain stagnant and maybe even decrease slightly. I know that some developers that we speak to or multifamily owners, they might be having difficulties renting out their units at that top rental level that we saw. But I do think in the long run, once we start to get over this, the rates will stabilize and will eventually start to go back up. I can't necessarily speak to the Toronto market as well, but here in Vancouver, there's such a limited supply of rental units.
Same here.
Yeah, and at the end of the day, I think that unless we see an influx of buildings get built during this time period, which we don't necessarily expect, I think it is going to continue to slowly ramp up again. Now, mind you, the BC government put a halt on all rent increases during this time period. And when I say I expect it to increase, it's going to be after we start to see some of the recovery and some of those policies fall by the wayside. So it will be interesting to see how that asset class does fully respond. Call it 8 months from now, once we start to see, hopefully, a semblance of normalcy get back to society.
Right. So one final question for you. Obviously, at a federal level, there's a lot of subsidy and grant, a 75% wage subsidy, $40,000 small business loans, and then BDC, EDC, the IRAP through the innovation programs. There's a lot of grants and loans and subsidies coming through, but at a provincial level, at the city of Vancouver level rather, are you able to share something that the listeners will find useful in terms of, are there any property tax deferrals during this difficult time?
Yeah, so probably most notable that came up more recently is last Thursday, the BC government did announce a program that they'll be reducing the school tax portion of our taxes for commercially designated properties only. So this will affect retail, hotel, office, industrial, not multifamily buildings. But ultimately, this is expected to result in a 25% reduction of property taxes. So hopefully it does reduce that burden for business owners. I do think that a much more interesting program is going to be the federal government's Canadian Emergency Commercial Rent Assistance program, where they say that they're going to be providing loans to commercial landlords to assist in covering the April, May, and June rents. Obviously, it's too early to tell exactly how that will be rolled out and who will be eligible for it, but that's one that will be monitoring closely on our end, because I think that that's going to have a major impact on how many businesses we do see close up during this time period. So I'm hoping that they make that program vast enough and comprehensive enough that it moves the needle in a positive manner.
All right, well, excellent. This is all the time we have for today. Thank you so much for your insight. And we look forward to chatting in the near future and hopefully on the other side when things are a lot better than they are right now. Thank you so much.
Perfect. Sounds good.
Thank
Thanks,
you.
Amar.
Bye.
Take care. Bye.